Good morning, traders. It is Thursday, August the 15th. Taking a look at the charts yesterday, a big sell off in the market, and we ended up getting short with a very small position with a non leveraged fund in case the market just rolls over and collapses from here. That being said, the market yesterday was showing all kinds of signs that it was oversold. We saw panic selling on the NYSE of 15 to 1, meaning there's 15 shares being sold to every one being bought, and anything over 3 is generally a short-term pivot low in the market. Anything over 8 is usually a fairly significant pivot low in the market, and so yesterday was 15, and that shows a lot of selling, and we could be starting to see the market break down in a bigger way if this continues to hold up. And the big question is, we've talked about this for a while. The big question is, are we here in this type of, are we here in this type of play where we go down to a nominal new low or a double bottom and then continue to rally up for a bit? Or are we going to potentially get into one of these where the market breaks down and never looks back until there's huge downside move in the market? So this pattern here could very easily be something like this over here, where we are probably oversold and we could see it come back up and trade in this range for a little bit and then have a potential of a big breakdown going forward. So we are in position in case that happens. We don't want to miss that drop. We've just stuck a toe in the water, and it is a very small position. So there's some pretty big volatility here, and we can see percentage-wise, just to get back to the upper end of this range, it's a pretty big percent. It's about 3% or so to the upside to get stopped out. So we'll let the market do its thing. It could be wild for quite some time if this continues to chop around. You can see it traded sideways here for a few months last year before going into this big sell-off. So we'll let the market do its thing, and we'll see where the money starts to flow. Now, if we take a look over at precious metals, they continue to grind their way higher. They're holding up above this blue line here, which is the 5-day moving average. So it's got good momentum, still holding its ground, but huge volatility. Obviously, we've been having news hit the market. We're seeing some pretty big intraday swings. Fear continues to pile into gold as kind of the core safe haven play, and also the average Joe, the masses, move into what they know is a safe haven move, which is bonds. So financial advisors just says everybody get into bonds, and bonds have been really performing exceptionally well going forward. And people aren't into gold and miners yet. We may be. We've known about it for a long time, but the average Joe is nowhere close to really getting into precious metals. They're all going into bonds and getting defensive there. But time will come when money starts to rotate into the precious metals, and we'll see those. All the average Joe money that we've been seeing going into bonds will start to flow into precious metals. Now, if we take a look over at silver real quick, silver's down a bit today again. If we just zoom in on the chart, huge price range a couple days ago. Yesterday ended up closing nice and strong. Today it's trading down again. Overall, money is slowly trickling into the precious metals, but we're not seeing that explosive move yet. A lot of that is actually the dollar continues to move up, and we're seeing the dollar and metals move up. I talked about this months ago, where the dollar and metals could slowly kind of teeter-totter their way higher together. A couple big strong days in the dollar. We've seen metals continue to move up. The miners have been under some pressure, but we're seeing the physical metals, the assets, the safe haven assets moving together. So this is a good sign. And when the dollar eventually does start to kind of roll over or have some sideways action, we could see metals pick up speed even more. So this is the fact that metals are moving up with the dollar is a very strong sign. So we're looking for the dollar to consolidate, and metals could really start to kind of float higher and pick up some speed. Now, if we look over at energies real quick, natural gas still in this downtrend. It's at the 20-day moving average. It's also at a resistance zone. If we were to just take this recent price action, carry it across, you can see we got resistance. We've had price trade through here a few times back and forth, so there's some volume through there, and it's a 20-day moving average as well. So this is still a bearish formation. Something very similar like this could happen again, where we have a flush down. We see it continue to sell off. If it can start to break this basing formation, there's going to be a few different levels through here that it needs to kind of break, but really it's got a lot of range in order to trade and form some bottom, but the bias here is to the downside at this point still. If we look over at crude oil, down 0.9% this morning. It came to resistance, popped through that resistance, and hit the next one, which was a falling support or resistance trend line right across these highs here. Market has reversed back down. Now it's back under the short-term resistance area and the chart. We'll see if it ends up continuing to roll over, putting in some type of sell-off again, or if it's going to start to break out and move higher. If it can start to build a pattern here, a break above this trend line could trigger some pretty good run back up into the 60 area, which if we were to just throw a Fibonacci extension on there, we can get a rough idea of where that's going. If we take this low up to this recent high and back down to currently today's low, carry it forward, we've got potential for crude to go from here to here. And usually the 618, if we see a hiccup at the 618, usually the 100% measured move gets tagged. So there's potential for it to go all the way back up to the 61, which happens to be this previous high in the market as well, right here. So that's kind of what we're waiting to see what's going to happen. Is this going to roll back over and start to break down? We've got a 44 downside target, or is it going to build a base, start to break out, and start to run back up with some much larger kind of W or double bottom formation that if this level is broken, then we're going back up into most likely the 70 mark going forward. Last but not least, let's just take a look over at the VIX real quick. If we take a look at the VIX, really just kind of some subtle movements in the market. The VIX hasn't broken to new highs. It's been moving up, but it didn't break the original collapse in the market we saw a couple weeks ago. VIX is kind of trading lower there, but if we look at the UVXY ETF, which uses more front month contracts and rolls forward, we're actually seeing more fear yesterday than we saw originally. So it is changed. It's a little different than the VIX. This ETF is looking at more forward month contracts, not just the current month. This for front month, it's looking at multiple going forward, longer term into the future, and the future contracts are holding a higher value, saying people are expecting more volatility in the future. So this is a sign that there's some pretty good fear in the market. And overall, looking for some type of big spike. I'd love to see a spike up to this area. It could be a great opportunity to actually do a short an ETF, because this should fizzle back down going through time here. Anyways, that's it for this morning. We're going to be looking for some new trade setups, and we'll get some more action going here. Talk to you soon. Bye-bye.